So I want to start talking about the cost of rent in Toronto, just to kind of set the tone here. This starts with a blog.to article. After over a year of lockdowns, things have been looking up. Patios are opening, retail is getting back in business. But as things start to return to normal, so too do Toronto's rent prices. Remember how fun rent prices were a few years ago? Well, get ready. Buckle your seatbelt. Toronto rents were down a staggering 20% year over year in November. You guys tenants were probably cheering that on. Woohoo! Let's go. Good things, right? Good opportunities. Finally, a bit of an opportunity to get a discount. In March, the city started to see rent prices increase after nearly 15 months of declines. You guys will remember by April, I was actually saying that there's going to be a trend here. Now's the time. We're going to start to see an increase in the rent rates. But reporters were very reluctant. In some ways, I think this is the first article I'm seeing this. They're probably still reluctant to suggest that without extra months of data, we can't determine if things are going to continue. Is this an ongoing trend or is this just a blip in the radar? Well, I think now we're going to start to see more and more people, like I've been saying for months, recognizing that this is more of a long-term trend. It isn't rocket science, by the way. I'm just a simple pilot that always flies the same plane. Guess you could say I'm very dedicated to my craft. But this month, the Pad Mapper Canadian Rent Report found nearly 2/3 of Canadian cities experienced growing rents again. Continuing. Toronto is actually just behind Vancouver for the highest median rents in Canada, which is funny because I remember just months ago, we were talking about how Toronto wasn't even the most expensive. There were other neighboring GTA cities that were higher than Toronto. What happened to that? I guess that's old news now. In Toronto, 1 and 2 bedroom rents inched up 0.6% and 0.4% for the last month, respectively. Medians are at $1,800 and $2,320, respectively. And it's worth noting that rents are still down 17% year over year. So you could say, yeah, there's a deal. And there absolutely is a deal. But it also tells me there's lots of room upwards. So lock in, tenants. There's your warning number one. And as I'm looking at some of the GTA active rental stats for the week, get this from Alex Zeland on Twitter, inventory is virtually unchanged since last week. So we don't see any ups, we don't see any downs, just seems to be relatively flat since we had a very steep decline in listings over the last little while. I mean, you can only decline so much before there's literally no listings left. And I think we've hit that plateau. So here we go. What I want to say, where I want to head here, guys, this is going to get a little more serious, right? Because I'm expecting hard times ahead. And what we're watching before our eyes is the financialization of housing these days. This is what's going on, guys. And maybe it's not a word I've used, financialization. Maybe it's one I should start using more often, but that's really what's happening when we're not defending the local and we're really just allowing money from large investors, from foreign companies to pour into our markets. And I had people comment, you're going to do this article. And absolutely, I'm going to cover this article. In fact, this is probably the most serious article I've had in this entire show. The Globe and Mail had an article called Condo Developer Plans to Buy $1 billion Worth of Single Family Houses in Canada for Rentals. A Toronto condo developer is buying hundreds of detached houses, developers, with a plan of renting them and profiting on the housing crisis ripping across the country, which drives me crazy. The feds, they just shrug their shoulders like, whatever, right? They're simply creating housing for renters across Ontario, right? That's all that's going on. They're totally ignoring that it's killing the hopes of Canadians ever owning a home. Shouldn't we at least try to recognize the bad guy? You want to know the difference between a Taliban fighter and an Afghan child? Well, don't ask liberals. They just pilot the drone, right? Core Development Group Limited is building a large-scale single-family home rental operation, an unproven business model in Canada where the market is fragmented and individual investors lease a small number of their own properties for income. I mean, we've had guests come on our show, and they'll own dozens and dozens of properties, and they get so much flack from some of you guys. But that's the top of the food chain. That's it, guys. We've got mostly small investors, a couple of rental properties, and that has been, in my opinion, praised, right? The apartment space as well right now is extremely competitive. We're seeing big players pivoting. One of the things that I find interesting, one of the values of an apartment building is that the way you qualify for a mortgage is less dependent on your income, more dependent on the profitability of that unit. But if I'm going to go in and buy 10 single family homes that I convert into duplexes, I'm able to, as a mortgage product, package those. I can bundle those into a commercial financing and still maintain the same beautiful qualification guidelines as someone who would be buying a multifamily apartment building. So these are things that are going on, but we've been kind of laughing. I mean, in the last few weeks, it feels like a month ago that I said, that I'm concerned about the US market because I'm seeing these including Canada, I'm seeing companies moving in and buying up all of these single family homes. And one of the nice things about being in Canada is we don't have that till now. Institutional house rentals have become highly lucrative in the US with private equity firms, pension funds, big companies throwing billions of dollars into the asset class. In Canada, deep-pocketed investors as well as real estate investment trusts have already acquired hundreds of apartment buildings to tap into the strong rental demand, but have not moved into rental houses. Man, so here's what they say. Quote, "We were trying to answer the question." This is CORE's president, by the way. This is the president of the company doing this. "Why is nobody doing this in Canada? We could not come up with an objective answer to that. In Canada, it works as well or better than the US. This is a developer. They're ready to go, ready to buy that single family from you. But I mean, you're trying to sell a single family home, so they're going to pay the highest amount for the property. Why not? Why not?" It's really funny because we've chatted with guests. I can think of a few guests off the top of my head. We chatted with guests about how you can have a large investor move in today. They don't even have to be that big into one of these smaller markets because the supply is so low and buy up all of the properties. And I really didn't want that to happen, but it is. It is. CORE's main business is condo development. In fact, they got 14 projects in the Toronto region right now, but last fall. So it's not happening today. It's already been going on since last fall. Mr. Houghton raised $250 million from investors to buy approximately, here's the plan, 400 properties, add basement apartments, and turn the houses into 2 rental units. You know that kind of easy burr strategy that you've been thinking, I can probably get into this space and do it? Yeah, they're going to compete against you now. So it's not just tenants, by the way, getting beat up. It's these small investors. These are who you're competing against now, multi-billion-dollar companies. CORE is targeting 8 mid-sized cities in Ontario, and this year started buying properties in. These are the cities, guys. So if you want to partner with this company and other developers and watch prices, again, like the financialization of real estate happen, including your property, here's the cities to do it. Kingston, St. Catharines, London, Barrie, Hamilton, Peterborough, and Cambridge. And it'll soon start buying in Guelph. Its medium-term goal is to buy, listen to this, $1 billion portfolio of 4,000 rental units in Ontario, Quebec, BC, and Atlantic, Canada by 2026. That's only 5 years away. Holy smokes, $1 billion gets scooped up out of our market like nothing in the next 5 years. So they believe a major house rental business will flourish in Canada because of decades of low rental vacancy rates, which is now what's happening again. This is why we're expecting prices to go up. Desire for more space, and Mr. Trudeau is excited. And while we were in the middle of a pandemic, we were probably all pretty excited about high levels of immigration. But when demand is what drives our market so heavy, a high increase in immigration, man, tenants, you guys have a whopping amount of, demand coming at you. And the only reason that they're looking at this as a valid investment option is because it works. It's successful. Making money as a landlord is a great and beautiful thing. The pandemic real estate boom has priced even more residents out of housing markets with rentals as the only option. I mean, but then at least they're giving us housing options, right? They're fulfilling that need that they've created. CORE chose the 8 Ontario cities because they all have strong local economies, are closer to larger job centers, have growing populations, and low housing vacancy rates. So far this year, CORE has spent $50 million on 75 properties. And I don't think everyone's going to want to just run to these 8 cities. Yes, you're going to see some price appreciation because, and the other thing they're doing is they're buying them in proximity to each other so that they can kind of manage them as they would a large multifamily home. But a lot of people might say, no, to hell with that. You don't want any part of that because that also creates higher risk. What if they decide overnight to sell, 50 properties, all flood the market? Not to say they're going to do that to kill themselves, but you get my point. You're playing a high stakes poker over here. So the warning, this is step 1. Expect many more giants to move in. That's one company in the next 5 years, $1 billion, 400 properties. But Toronto-based Tricon Residential, one of the largest operators of single-family home rentals in the U.S., said CORE's decision to split the properties into 2 rental units makes sense given the prices of houses in Canada, meaning they can kind of get that positive cash flow. But we have the United States who are currently doing this. They are now starting to say, hey, maybe there's an opportunity in Canada. Other than the fact that our dollar is so strong relative to the US, maybe that's what's protecting us today. God forbid that gets to any level of back to balance. But anyways,